Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Monday, September 20th, 2010. This morning we're talking about no lipstick for this pig. When I say that, I'm talking about the country of Ireland. Ireland, as you may know, is referred to as one of the pigs countries. That's Portugal, Italy, Ireland, Greece, and Spain, which have been undergoing some fiscal deficit problems over there in the Eurozone. So that's been sort of on the minds of a lot of traders recently. As they've been talking about the deficits over there. There's a problem in the Irish banking system, and just yesterday the Irish finance minister came out and said that Ireland would not have to access the EU and IMF's emergency bailout funds. So this has helped some of the bond yield differentials decrease over there, and it's providing a little bit of confidence in the euro market now. That's helped push European stocks higher this morning, but yet we're seeing a little bit of Eurozone weakness. I'm just looking here on a 2-hour chart. You can see earlier on this news it came out was stronger. In the last couple hours we've sold off a little bit, and we're just around flat euro to dollar right here. So looks like the recent high here in the week's been around 131.5. So we're going to see if the euro can retest that. All right, and I also want to mention here the Aussie. Looks like we're putting in a slight little double top here on the 2-hour chart, but before we call this a reversal here, we want to take a look at this on the longer term chart. Now I just want to go back and look at the weekly chart, back over the past 2 years. Maybe let's go further, 5 years if we can. All right, so we are just eclipsing a 2-year high here on Aussie versus USD. Okay, and just recently, I guess earlier in the evening, RBA Governor Glenn Stevens came out and he said that they may need to continue raising interest rates there as the economy's looking pretty robust in Australia. So, that's a good sign for the Aussie. You can see it's higher. Just want to go back to the 2-hour chart. And then I also want to talk briefly about the pound. Okay, the pound's actually lower this morning. They had some recent housing data that came out that wasn't too swell. Housing prices were off. They came in lower than expected. Now, on Wednesday, the Bank of England's going to release their rate policy meeting minutes, which is going to show whether or not they're thinking that inflation there is going to cause them to normalize policy and potentially raise rates. Well, at this point, we've been getting some recent, deflationary data coming out of the UK. So my guess is that despite what these minutes may say, that they're not going to do anything with rates going forward. So just wanted to also show you here we got the Kiwi. Okay, the Kiwi looks like it could be setting up for a little bounce higher, maybe a retest here, coming back up to the 73.8 level, 74. Okay, they've got consumer confidence figures that came out overnight that were better than expected, and they're going to be releasing their GDP figures later this week. Now, bear in mind that those figures are not going to include economic activity that's occurred since the earthquake. Okay, but if the numbers look pretty good, people could say, hey, you know what, maybe the earthquake, while it pulled back on some of the economic activity, it could provide for further economic activity as they go through rebuilding phases going forward. So we're going to have to see how that all plays out. And lastly, I just want to take a look at dollar yen here. All right, pretty flat here. Market's still trying to figure out what to do with this whole intervention deal. Now, today in the U.S., we're going to get this town hall meeting sponsored by CNBC. President Obama's going to be on. He's going to be talking about the economy, jobs, a whole bunch of stuff. And I'm guessing that this is going to be an orchestrated event with, very careful words chosen so as not to upset the markets. But tomorrow we're going to get the FOMC meeting coming out of the Fed, 2:15 Eastern Standard Time, and that's going to really show what Bernanke thinks about the health of the economy. Now, chances are he's going to continue with the extended period language, not wanting to upset anything. But, at some point the market's going to get a little bit bored with that and say, hey, wait a second, pal. Something's had to have changed over the course of the last, 6 to 8 months. You just can't come out with the same statement every single time. And, we're going to think that, everything's honky-dory. So, I don't know what the reaction is going to be tomorrow to FOMC, but I can tell you that that's going to be a volatile event. So, that's always an interesting time to trade. So you just want to kind of be careful what's going on at that point in time. So as we have this week, it's pretty light on news here. There's not a ton of market moving stuff going on. So usually when that happens, you get the rumors that pop up to just sort of fill the void to induce a little bit of market volatility. And one of the areas where this happens quite often is obviously the Eurozone. I mean, you've got these pigs countries out there. Everybody knows about the problems, so that makes them an easy target. All you got to say is, there's a problem with with the debt or the banking system or something like that, and all of a sudden the market runs into risk aversion mode and you get volatility, and that's pretty easy to do. Now the commitment to austerity in the Eurozone it's well known what they're looking to do here, but they got to walk a fine line between reducing deficits and still encouraging growth. But as of right now, while that solution may be the best one offered out there in the global economy, all right, it's going to also be a big target there for those who want the markets to be volatile and swing around. So it's going to be interesting to see what happens with this Obama meeting today. Obviously, the focus in the U.S. is on jobs. We have a lack of economic confidence here, which is causing potential economic stagnation. So we're going to have to see what the Fed says tomorrow, what they expect, but I think market's going to be pretty volatile. So that's what I'm looking at today. Trade cautiously going into that FOMC tomorrow, and good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.